Hello, everybody. Welcome to Why Invest in a New Build Rental Multiplex in Windsor-Essex County. I think that the fact that you guys are here, that means you are interested in Windsor-Essex County and you are interested in having a new build rental multiplex to get most of your investment returns. So let's get right into it. Discover the lucrative opportunity of investing in a new build rental multiplex in Windsor-Essex County. This thriving region offers strong returns, steady income, and long-term appreciation potential. Why Windsor-Essex County, that you might ask? I've actually made another video, talks to you in 30 minutes and in depth about what's so great about investing in Windsor-Essex County and why you should consider it. But for now, let's just do the Cliff Notes version of it. Number A is strategic location. Windsor's proximity to Detroit offers unique cross-border employment opportunities. The city's diverse economy attracts a steady influx of renters. Number two, growing population. Essex County is experiencing rapid population growth. This trend is driving high demand for quality rental housing options. Number three, infrastructure development. Ongoing infrastructure projects enhance the area's appeal, improve transportation, and amenities attract more residents and businesses. And for those of you who have not visited Windsor-Essex, it is just like 20 minutes drive to Detroit. And as we speak, another bridge, the Gordie Howe Bridge, is being built, which is scheduled to be finished in March of 2025. Right now, travelers are using the tunnel and the Ambassador Bridge. And there are lots of people who work in the US and stay here, and also we are attracting a lot of talent pool in terms of immigration who wants to settle in the city because of Windsor being very affordable than other Ontario cities. Also, the renters are students, as University of Windsor and St. Clair College attract a lot of students in the city. Growing population, as I've already mentioned, these are the reason why people keep coming to Windsor-Essex County. I mean, in the last 4 years, let me tell you my experience, I think it has quadrupled. The population is quadrupled in the city. Infrastructure development, I think it's one of those few places that there's still land and there's still development that's possible in the county, and that's why we are here to explore what can we do for you to get it all started. Potential rental income and cash flow. Why should you consider having a rental in Windsor-Essex County? There's a strong rental demand, as I've already pointed to you earlier. Windsor's growing population creates a robust rental market. New build multiplexes command premium rents due to modern amenities, steady cash flow. Multiple units provide diversified income streams. This reduces vacancy risk and ensures a consistent monthly cash flow. Increasing rental rates. Windsor's rental rates have been steadily increasing over the time and has higher than average rents. Why should you consider doing a new rental build as opposed to the older one if you are an investor? Number one, depreciation deductions. Claim significant depreciation on the building's value. This substantially reduces your taxable rentable income. Number two, mortgage interest deductions. Deduct mortgage interest payments from your rental income. This lowers your income tax. Number three, capital cost allowance. Take advantage of Canada's capital cost allowance for rental properties. This provides additional tax saving opportunities. And number four, and this is the ninja move, which I have not put in there, but I'm going to tell you. So if you're listening to this, this is your biggest golden nugget. After 2019, the Ontario government has not imposed any rent control over new build rentals in Ontario. So if you hold a traditional old building for rentals, then according to the Ontario law, you can only increase your rent by 2.5%. But if you have a new build after 2019, there is no rent control. So you can rent it at $2,000 today. If you get a tenant next year, you can rent it at $2,500 to next year. There's no control. And then 3,000 later, there's no rent control. But if you have something older than 2019, then you're at 2.5% per year only. Why should you invest in having a multiplex model over single family rentals? Single family rentals, yeah, it's all good. You will get it within $500,000, but why should you go for something of a high investment and many doors as opposed to one door and lower investment? A higher rental income potential if you're doing multiplex because there are many doors, so you earn more. Single family rentals, there's just one door, one or two doors, so lower income potential. Greater efficiency and economies of scale. You can increase your income potential with a multiplex as opposed to having a single family rental because you're maintaining the same. Your maintenance, the level of maintenance more or less is going to be the same on both. They are the same things that you got to do for both, but doing it for a multiplex, at one go you are servicing 12 units, and at one go you're servicing only 1 or 2 units for your single family rentals. Tell me which one would make more sense to you. Of course, the multiplex. Potential for shared amenities and limited amenities. So if you have shared parking lots, and if you have a bigger rental unit, you can have a play area. All of those things are possible with a multiplex, but not possible with single family rentals. Growing rental demand in Windsor-Essex region. Why is Windsor still a vouched for place for multiplex rentals? Limited housing supply. The supply of affordable rental housing has not kept pace with the growing population because, as I told you, in the last 4 to 5 years alone, there has been a huge boom in population, and the housing supply has not kept up with the demand. Increasing affordable concerns, homeownership is becoming increasingly challenging for many residents, driving demand for rental options. So as we sit in November of 2024, and this I say over the 2 years, 2023 and 2024, average sale price of a single family home is $579 or $580. Let's just say in between, for ease of calculation, $550 to $575, and that is still 3-bed 2-bath, which is probably like 20-30 years old, maybe even 50 years old in most cases, and it might not have any income potential for single family homeowners to rent out and live in it to house hack. So it would just be for them. Of course, for a family earning less than around $70,000, they would not be able to buy something that's around $600,000. And that's why the renting options, having rentals, and this area is more right for it and ripe for it. Strong employment market, a robust job market attracts new residents and increases the need for quality rental housing. Again, I'm going to put a link on the video that says why invest in Windsor-Essex County, and I go through all the economic development happening in the county. There is Nexstar Energy Center that's coming up that has opened up a lot of opportunities here, added to many other industries that are budding up and have support for. This is going to increase people who can afford a good rental unit, and hence the demand for having multiplex rentals. Demographic and economic trends in Windsor-Essex. Population growth. Windsor-Essex County is experiencing steady population growth fueled by young and diverse demographic. Economic expansion. The region benefits from a diverse economy with strong sectors like automotive, manufacturing, healthcare, and tourism. Government investments. Significant government investments in infrastructure and economic development are driving growth in Windsor-Essex. this I've already gone through, and government investments. There are definitely a lot of economic development initiatives taken by the government, and there are some places where they don't charge development charges too. So the county is huge in opportunities. It's just the right project needs to be tapped into it. Financing options and loan programs. So if you want to build a multi rental, how would you finance it? Number one would be, of course, conventional mortgages. Traditional financing options available from major banks typically requires 20-25% down payment for investment properties. It depends on the profile of the investor. Number two, CMHC multi-unit mortgage loan insurance program that access lower down payment options through CMHC programs available for properties with 5 or more units at as low as 5% down. Number three, private lending options. Alternative financing solutions for investors may offer more flexible terms or faster approval process. I also do a case study towards the end of this seminar, so please hold on to it and I can give you some numbers on how those work. Going back to this, I just want to add a couple of options here. For private lending, you can also do it as a joint venture between different partners. A lot of my clients have done that, and that has worked out lucratively. Diversification and long-term appreciation. Portfolio diversification or multiplex adds diversity to your investment portfolio. It balances risk across multiple units and tenant types. Property value growth. Windsor's real estate market has shown consistent appreciation. New builds are well positioned to capture this growth. Forced appreciation. Implement value-add strategies to increase property worth. Upgrades and efficient management can boost overall. Inflation hedge. Real estate historically outpaces inflation. A multiplex provides a natural hedge against rising costs. So if you're here, you're probably an investor and you know all this. So I'm gonna quickly cruise through this. Amenities and demand in Windsor-Essex County. First off, as I've already told you about University of Windsor and St. Clair College, they drive a steady rental demand on the west side. Students and faculty seek quality housing options near campus. There are other smaller educational institutions as in terms of private schools, and it would apply the same for them. Entertainment and tourism. Caesars Windsor and waterfront attractions boost short-term rental potential. Tourism creates opportunities for vacation rentals and Airbnbs. Natural beauty. Windsor's park and waterfront areas enhance quality of life. These amenities attract long-term renters seeking a balance of urban and natural settings, and this applies to all the towns in the county. Projected rental income and returns. Now, of course, with the rental rates and high occupancy rate, year one is going to be great for you because there's no rental control. And it's new, so you will attract the best rental profiles. Year two, continue to optimize occupancy and minimize vacancy periods. So the fact that you can have quality tenants, high-paying tenants, and no rent control is just a recipe for higher cash flow, and it creates stable rental income with strong cash flow and positive return on investment over time. Projected returns and analysis. Cash on cash return. Expect 8 to 12% annual cash on cash return. This measures the cash income earned on the cash invested. Cap rate. Projected cap rates of 5 to 7% for new builds. This indicates the potential return on investment. Total ROI. Potential for 15 to 20% total ROI when combining cash flow and appreciation with annual results. And this is all approximate. Appreciation. Historical annual appreciation of 3 to 5% in Windsor's new build, and it may vary. Now let's talk about construction and development details. So building type, let's say we take a new build type and number of units being 12 to 24, and you can put any unit mix of 1 bedroom, 2 bedroom, 3 bedroom. Amenities, you can throw in a parking lot, a gym, a rooftop terrace, energy efficiency, high efficiency HVAC, LED lighting, and all the smart home features with keyless entry, smart thermostats. Tell me, who wouldn't come for a house like this to stay as tenants? You're creating high value, high quality rental units. Now let's just see. I'm just trying to pull on the open the calculator here. And of course, it's just when I want it, it's not opening. Let's just look at from my phone. Say for number of units of 12, we do rent a good mix of 1 bedroom, 1 bath, 2 bedroom, 1 bath, and 2 3-bedroom, 1 bath. 1 bedroom, 1 bath goes for a market average of 1,600, and 2 bedroom, 1 bath goes for a good market average of 2,200, and 3 bedroom 2 bath goes for $2,500. Together you would be looking at around $24,000 as your rental income per month for a 12 unit with this kind of mix. Now let's look at the investment that you would need, and this is just an approximate, considering we do it within the county and we keep our costs low. Say we do it for like $2.5 million for a 12 unit building. We are looking at for 75% LTV, and I'm also considering either we're going for CMHC or we are doing the conventional mortgage. We are doing at say 6% with 75% LTV. We're looking at 11,000 per month. So with 25,000 return, 25,000 rent, and your mortgage being 11,000, that's huge. That's almost like 100% of returns on your investment every month that you will be getting. It's just to give you a perspective on how lucrative as an investor it would be for you to invest with partners for this venture as compared to having a single family at your rental investment. Now let's look at the risks. Market fluctuations. There are definitely market fluctuations in rentals that we see over time, vacancy rate, and property management challenges that you might have. Market fluctuation. Diversify your portfolio across different property types. Stay informed about local market trends and economic indicators. Now, because that I gave you this example of having 1 bed, 1 bath, and 5 2-bed, 1 bath, and 2 3-bed, 2 baths, because this gives you a good mix of diversification and brings in people of all economic stratas. So your vacancy rate is still going to be really low because of that. And your property management. So once we do the multiplex, we're going to hand you over to a couple of reputed property management companies that you can interview and feel comfortable with before working. Financing options. Traditional mortgages, secure a mortgage from a reputable lender. So this I've already spoken to you about, banks and the LTV for traditional mortgages for new construction. There's also an option for private financing, and there's also joint ventures that many of my clients do together. That is with joint ventures with other partners. We can delve more into it, and it's a handheld approach. With me, I will be helping you with the financing, the land acquisition, as well as development and property management to be handed over. I understand this is just the tip of the iceberg that I have touched with this topic. There might be many questions that you might have, and you can always fill out the form at aishaaccessventure.com/investorspartners, and or drop me an email at meheraisha@gmail.com, and that's 2 R's and 2 S's, or WhatsApp me at 647-806-5444, and my team will get back to you with all your answers. Take care, guys. If you have any questions, I'm just a click away. Thank you so much.